Good afternoon. It's Wednesday, April 20th, 2022. Yesterday, the federal government made a lot of payments to senior citizens, many of whom were not expecting it, uh, and it had to do with their GIS. I'm going to discuss that separately, but this is just a primer for those of you who are not all that familiar with Canada's official retirement pensions. Most people really aren't until you get there, and then it's confusing. Canada has three levels of pensions. One is the Canada Pension Plan. The Canada Pension Plan is contributory, and it's very difficult for people to figure out because it works on the idea of a percentage of the maximum average income for a typical Canadian. And every year it goes up. So as long as you're making the maximum every year you work, then when you get to retirement age, you're going to be getting a pension based on that maximum, which is this year's maximum, even though in previous years you're making less than that. So it's based on comparison to an average income. And for the Canada Pension Plan, you have to contribute and your employer has to contribute. And if you're self-employed and have no employer, then you're contributing both parts. It's not particularly inexpensive, but it does serve a purpose. There have been some changes in the last 2 or 3 years. I just want to cover the basics. So in Canada this year, the maximum Canada Pension Plan payment to an individual, and there are some complicated rules whether you retired late or early and stuff like that, but for a normal person retired at 65, the maximum Canada Pension Plan that you can receive is, I have to look at this, is $1,253.59 per month, which is $15,043 per year. So if you have a maximum Canada pension, you're going to be getting $15,000 per year as a payment from the government. It's paid at the end of each month, by the way. And if you have a normal person, because the government keeps track of how much people are really getting, the average Canada pension monthly payment for Canadian citizens now is $779.32 per month, which is a total of $9,351 per year. So even though the maximum Canada pension plan is around $15,000, the average for all people collecting Canada pension is $9,351. That's one layer, Canada pension plan. You contribute to it. There are many people who have no Canada pension. These would be typically people who are self-employed, worked as farmers and so on. In earlier years, we didn't have to contribute to Canada Pension Plan, and so they end up hitting retirement age with no Canada pension. Most people who work for a company will have somewhere between the maximum and the average Canada Pension Plan. If you worked half your working life but had to retire early or got started late, you might find yourself around the average. Okay, the second layer is the old age security pension. Most people call it the old age pension. The government abbreviates it to OAS, meaning old age security payment. This is a plan that's paid to everyone just for being a Canadian. Now there's a lot of confusion about, well, what if you're a non-resident, stuff like that. But for the most part, as long as you've been resident in Canada for the last few years, you get the full pension. So for all intents and purposes, every Canadian retired at 65 is getting the same old age pension, which is this month $648.67, or $7,784 per year. So that's the second layer, the old age pension, which you don't contribute to, you don't have to pay into it. You get it because you're a 65-year-old Canadian. Now, Canada has a third layer. It's called the Guaranteed Income Supplement. And there's some complicated variations of it, but to keep it straightforward, it's almost always someone's getting a Guaranteed Income Supplement if they are collecting the old age pension. That's the one you get anyway because you're 65, and your total income is below a certain threshold. The idea being that we want to make sure that everyone in Canada, whether they've got an old age pension, how much old age pension they got, Canada Pension Plan or whatever, that they get at least a livable amount. It's called a Guaranteed Income Supplement. And the idea is to provide a monthly income for all Canadians, regardless of their pension circumstances. So the number has been going up recently, but at present, the maximum guaranteed income supplement per month is $968.86. And to collect it, you have to be making less than about $19,000 per year. So the idea is no one should be making less than the supplement plus the old age pension plus whatever kind of pension plan they have. The smaller your kind of pension, the greater the supplement. The supplement is basically, to make it easy to understand, is $968 per month minus one half of any other taxable income you have, like the kind of pension plan, but not the OAS. So the idea being, so I'm just going to give you some numbers to get the idea. Let's say you never contribute to the Canada pension plan. Your total guaranteed income supplement would be $968 per month, plus your regular old age pension be $648 per month. So that's a total of $1,617 per month, or about $19,000 a year, which is the objective. If you were an average Canadian collecting the Canada pension plan, but you had no other income, no other taxable income, then, and so if your Canada pension was $779, then your OAS is $648, and it's the same amount. Your guaranteed income supplement would be calculated as $429.79 per month, for a total of $1,857 per month. That's the rock bottom that you should be expected to live on in Canada with a guaranteed income supplement. And if you were collecting the maximum Canada pension plan, which is $1,253 per month, you've just priced yourself outside the limits of the guaranteed income supplement, so you get no supplement, but your $1,253 plus $648 as your regular old age pension gives you $1,900 per month. So the range from people who have no Canada pension plan to a maximum Canada pension plan and no other income is going to be between $1,600 and $1,900 per month. That's what they need to live on. That's the idea of the guaranteed income supplement. Now there are some complications, and one of the things is because the government tries to figure out how much you're entitled to, they base it on previous tax reporting years. So there's a misalignment. When you first retire and you apply for the guaranteed income supplement, the government allows you to say, what job did you retire from? How much were you making? Okay, so even though you paid tax on it last year, say in 2020, for 2021, we're not going to consider that as other income for the purpose of calculating your GIS. It's going to be based on your income that's ongoing, your Canada pension, your old age pension. And that's how your GIS will be calculated. Will not be affected by other income which has ceased prior to the time you went into the GIS. Now, it would be great if they could do that every year, and I have an idea for how they should, but nonetheless, it's based on previous year's income. So now what happens if you get a lot of money in the year, 1 year, maybe it's a year after you retired, you got a windfall or something like that, you had to cash in an RSP or something like that. Suddenly your total income goes above the $19,000 per year maximum, and you end up having no GIS. They claw back your GIS regardless of how much monthly income you have in the current year. So this is a problem. This is a disconnect because it loses faith with the concept that no Canadian should have to live on, no retired Canadian should have to live on less than about $1,800 a month. If you got a lot of money in the previous year, it may be taxable, but it also cuts into your ongoing income for the current year. So we now have, and I'll explain in a separate video, quite a large number of Canadians who ended up having a little bit extra money in 2020, but that money stopped. And even though they were collecting the guaranteed income supplement in 2020, because they got that money as a taxable amount in 2020, the guaranteed income supplement was they were disqualified from it because they had too much income. So the result is they had their guaranteed income supplement clawed back. So in the case of someone who was saying an average earner, they were making $779 per month from their Canada pension plan, and they were getting $648 a month from their old age pension, and they used to get $429 per month from their guaranteed income supplement for a total of $1,800 a month. Suddenly, because of GIS has clawed back, they're only getting the $779 and the $668, which is $429 less per month than they've been living as a minimum amount. Now, this is the minimum, right? Consider if you're a retired senior citizen with not a lot of wealth, but 1 in 4 Canadians age 65 and older are on the supplement, by the way. It's quite a large number. And if you have to pay rent and you have to buy food and so on, $1,800 a month is not too much money. It doesn't really provide anything for important other things, like dental care, for example. So when that $429 is taken away, you're in big trouble. Now, I just want to give you the background of those 3 pensions so you can understand how these numbers work. And I'm going to do a separate video to talk about what's just happened.